Hello and welcome to my more important analysis videos on Friday the 27th of April with me, Richard Perry, market analyst at Hantec Markets. We've got a continuation of this dollar strength that has been sort of a feature of the last few days. That has continued to pull the dollar lower. Look at these interest rate differentials, which are now starting to play a real role in pulling euro dollar down, in pulling dollar yen higher. And it is still a key factor, and what we have seen just in the last few minutes is UK growth disappointing significantly to the downside, and yeah, that has pulled the dollar strength once more. This dollar index continues to break out, continues to move sharply higher. Certainly 92.50 is probably the next area that you could see a stopping on that dollar, with the volatility, with the momentum behind this move. And you can see that sort of reflected in these forex majors, that the dollar is outperforming across the board. You're seeing that. Look at that, 100 pips down on sterling now, and you've seen that across the forex majors through the list of them. You've also got positivity coming through on equity markets as well. We saw Wall Street climbing yesterday, 1% higher on the S&P 500, and that has certainly helped to pull markets higher today. You've got this meeting between the two heads of North Korea and South Korea, and that's a historic meeting, and it's certainly helping to sort of settle a little bit of nerves. Volatility in equity markets lower as the S&P 500 sort of pulled back higher yesterday. So the general sentiment has certainly improved. 12,600 key level on the DAX to watch out for, I would say, today, with the DAX not a million miles off that. And yeah, it certainly looks like the market is fairly positive. Interesting that gold is not really falling away as the dollar has strengthened, and you've had that improvement in risk appetite. So that's something to keep an eye on. But at the moment, we're certainly seeing this continued dollar strength running through the markets. Now, we've got GDP growth for US today. We've just had the UK, as I said. The US GDP growth is a key factor at 130, and it's expected to be 2% annualized. Now, whether there's any sort of linkage to weather-related factors, certainly that was an impact on the UK data that we've just had just now. But certainly I'd noticed last week that the expectations had been steadily sort of pulled back on the US GDP, and it's now around 2%. The Atlanta Fed's GDP nowcast suggested it was going to be 2%, so it's probably not going to be too far away from that level later today, but that will be a key factor this afternoon to watch out for. So that takes me to my chart today, which is Euro Kiwi. Now, Euro dollar yesterday fell sharply down below 121.55. That was a key level break, and we also saw a turnaround in Euro Kiwi. Big rally actually in recent days, or recent couple of weeks on Euro Kiwi. A run of 8 or 9 candles in a row of bull candles they are, but you had yesterday a breakout above 171.60, turned back from 172.55, and also, interestingly enough, formed a bearish key one-day reversal, bearish engulfing candle, which is now sort of testing and breaking that uptrend on Euro Kiwi. You can see on the hourly chart that uptrend has actually already been broken, and it's starting to sort of generate a little bit more downside momentum. Look at the configuration on the momentum indicators on the hourly. 50 previously was a basis of support on the RSI. That's now become a base of resistance area. Look at those MACD lines as well. Stochastics turning lower. This looks like a market that is sort of beginning to sort of roll over, and I think the euro is going to be coming under pressure in coming days, and certainly that is a turnaround candle yesterday, seemingly continued today. So in terms of retracements, you'd sort of look at where you're coming out back into sort of the middle of this range. Really, it's difficult to really sort of put too much on targets in this, because obviously it's a range retreat. Effectively, you'd argue that is a false outside break of this recent range. And you'd think about sort of old supports within the range 69 figure area and then 69.70, so maybe a sort of retreat towards that little mini breakout of earlier in April, and the old support, which is a bit of a pivot around sort of 69.60, 69.70. So a retreat back towards there may easily be seen in the coming days. That would also take you back to the moving averages as well. So the stochastics have crossed lower, not confirmed yet in a corrective sell signal, but still they have crossed lower, which suggests the momentum has been lost out of that rally, and the RSI sort of pulling back from sort of around 70, around where that those November highs came in before the market crossed and started retreating. So this looks like it's a bit of a retreat now on the Euro Kiwi. The other thing I would add is this 55-hour moving average. Basis of resistance turned into basis of support on the way up, and is now rolled over at 71.90 and is now a basis of resistance again. You've got the a bit of a pivot area, sort of 71.60 up towards 71.90 area, I would say. 72 figure area is a bit of a sell zone, I think, now. That 55-hour moving average comes in at 71.90, so there is resistance now coming in overhead. So I wish you good luck in your trading today, and I'll speak to you later.